The electric vehicle market has absolutely exploded in 2020, and EV companies are trading at record highs. And Jim Cramer just announced his pick for the EV company he believes has the best claim to become the son of Tesla. And he chose Arrival. This is a very young British electric vehicle startup that still hasn't even produced a vehicle and has no vehicles being driven on the road right now. So in this video today, we're going to take a look at this company. They plan to go public through a merger with a SPAC, ticker CIIC, in the first quarter of 2021. And over the past month, this SPAC has seen a record growth in share price. Over the past month, shares have grown 168% and currently trade around $27 per share. In one single day, the shares of this company have grown by over 26%. So in this video, we're going to take a look at Jim Cramer's opinion on the company, and then we're actually going to do a deep dive and go through page by page of the investor presentation. We're going to discuss the future projections for Arrival, what they plan to produce, and when, and if we actually believe Arrival can be called the next Tesla, or if this company is a buy right now before the merger with ticker CIIC. So if you're new to the channel, everyone, I am the Gen Z Investor, and every single day we talk about the stock market, we go over different stocks you can buy and sell, or any other major market news and headlines. And the electric vehicle market has been breaking headlines all year in 2020, and they continue to do so with Cramer's big claim that this company may be the next son of Tesla. So Arrival plans to manufacture electric buses and vans. So they are still very early on in this startup process, but Cramer still thinks they have a strong future. And he believes their story is more compelling than the other small-time EV startups that are going public in the market through SPACs. So the one point of difference with Arrival that may set them apart from their competition is their idea and their plan to create these so-called micro factories. So we're going to discuss them later on in the video, and this is the one point of difference that has the potential to set up Arrival and beat the competitors long-term down the road. These micro factories are not fully developed just yet. They're still working on getting this design made up, but if it is possible, that's what Cramer believes is going to set the company apart and really let them become a potential big-time player in the EV space. So overall, they're trying to change the entire auto industry, especially like all the young EV companies say, they're all planning to change the world. So what Cramer likes about Arrival in particular is because they own a ton of their own intellectual property, they make all of their own components, and he believes they'll be very cost competitive with traditional gasoline and diesel vehicles. So he believes Arrival right now at that $5 billion valuation is sustainable from the get-go. Now we're going to take a look at the investor presentation, and I'm going to give you my personal opinion on this company. One thing I want to point out is I've already gone through the entire presentation, read through all the key points, I've summarized the most important factors I wanted to share about the company. But one thing I want to mention from the very beginning before we do kind of a rundown of the key points is that this is a very risky company. They have no revenue right now, they haven't produced a vehicle just yet, and they aren't planning to produce a vehicle until late 2021. And all their orders that they're projecting down the road still have the potential to be canceled or modified. Nothing is fully set in stone, and this company is still very, very early on, and I want to make that this is a more speculative play, a higher risk investment, and if you choose to buy this company down the road, and you want to buy this company pre-revenue before there's any proven results, there is some associated risk. Of course, there may be some potential reward from that, but one very important factor to remember is that with a high risk, high reward investment, the high risk is always guaranteed, but the high reward is not always guaranteed down the road. So I want to make that very clear before going into the presentation. I am not a financial advisor. This is me just sharing my personal opinion on this particular EV brand. You have to speak with a qualified professional before you actually make any investment decisions, but I want to share the risks before actually taking a look at this presentation. So right off the bat, they plan to go public and do that merger with ticker CIIC in the first quarter of 2021. And once that happens, they will trade on the NASDAQ as the Arrival Group. So this company, the Arrival Company, has some key investment highlights that they share right at the beginning of the presentation. So they claim to have $1.2 billion of orders, and we will break that down later on. They have 4 different vehicle designs expected to be in market by 2023, and they plan to start production of their first vehicle in the fourth quarter of 2021. Arrival is also showing that they have strong partnerships with 2 of the largest car manufacturers in the world, Hyundai and Kia Motors. They're showing investment of 100 million euros plus a business collaboration agreement for future developments down the road. But the one major partnership that is really driving the idea that Arrival can become a major player in the EV space is their commercial partnership with UPS, because UPS has placed a 10,000 unit order with Arrival. So this order is estimated to be worth around $1.2 billion, and that is the foundation for all these high expectations for Arrival over the next 3 to 4 years. This one order of 10,000 units plus the option for an additional 10,000 units is really what all the future projections for Arrival are based off of. But one thing I want to make very clear that you can actually state in this investor presentation, we'll go over it later on, is that this order from UPS can be canceled or modified at any time. It is not fully set in stone. So all of the future projections for Arrival are really solely based on this $1.2 billion of first estimated revenue and first orders that can actually completely get taken away. But Arrival is stating that they have a strong partnership with UPS and that they are the first ever company to create a purposely built vehicle for UPS deliveries. So of course, the UPS order is really what's driving the hype behind Arrival. But now we're going to take a look at the different vehicle options they plan to produce over the next 3 years. The first one is the electric bus, starting production in the fourth quarter of 2021, followed by the electric van, starting production in estimated 2022. And these are going to be the two real drivers for the business, the two main products that they plan to sell at scale over the next few years. They also plan to produce a large electric van and finally a small vehicle platform in 2023. But what we're going to focus on today's video is the electric bus and the electric van because those are going to be the two drivers of the business. They say they have best-in-class zero-emission vehicles that are autonomous ready. So autonomous driving isn't out there right now. There's still a lot of players in the EV market that are still testing that type of production. So I really don't think their vehicles are going to be autonomous ready. They may just have a system in place for once it's fully developed to make their vehicles fully autonomous, but no way they're going to come out of the gate fully autonomous. So I think that is a little bolstering up what they're saying, but I just want to point that out that although it says autonomous ready, I don't think so when they first hit production and first hit the road. If we take a look at some mock-ups from the Arrival website, this is the planned design for the electric van, and this is going to be the planned design of the electric bus. So of course, they somewhat look like traditional buses and vans with a little bit more sleek and modern design. So if we take a little bit deep dive into the company's future growth potential, they expect their potential sizable market to be around $430 billion, and that of course is made up of the addressable van market and the addressable bus market. Add those two up, and you have that estimated $430 billion market opportunity down the road. Another claim made in this presentation is that Arrival vans and buses are going to be more cost efficient throughout the total ownership of the vehicle compared to their competition. So they expect the total cost for an Arrival van to come in at around $92,000, which is 17% cheaper than a diesel van and around 28% cheaper than a competitor's EV van. And the total cost of ownership for an Arrival bus will come in around $396,000, which is 47% cheaper than a diesel bus and over 50% less expensive than a competitor's EV bus. So this is over 10 years with different amounts of kilometers driven each day for each specific unit, and overall they expect their engineering to serve 10 plus years. So they're stating some very bold claims here that they expect their EV van to be 28% more cost efficient than their competitor's EV van, and that their Arrival bus is going to be 50% improvement compared to competitors' electric buses. So some very bold claims coming from Arrival with regard to cost of ownership that we will have to see down the road if they can actually get production on the market and if these claims can actually be accurate over a longer term span on the market. So now we're going to move away from the actual facts about the vehicles. So of course, with every young EV startup, they're going to say that their vehicle is better and badder than every other EV company on the market. Because if they didn't, no one would buy into the hype and no one would want to buy into the company because who wants to buy the stock of a company that's going to produce an average vehicle when there's competitors that are saying that they will produce the best ever? So of course, every young Arrival company and all the other EV brands competing with Arrival are going to say that their vehicles are going to be much better, more cost efficient, and have longer lives than every other competitor on the market. So nothing new with all the bold claims that they are making. But now we're going to focus on the one point of difference that can really help set Arrival apart, and that is their microfactory approach. So what Arrival is planning to do is create a microfactory like you see in this quick picture right here. So essentially what this microfactory is going to do is take up very little space, and this individual microfactory will have the capacity to produce any single of the 4 different designs for Arrival vehicles. So in this single little mini factory, they can produce the van, the bus, or the small platform vehicles all from the same location, which is very different, and that's the one point of difference that may set them apart from other companies. Because the traditional way of producing vehicles is setting up one very large factory to produce that same vehicle at scale from that same location each and every day. But Arrival is trying to change that with these micro factory approach, where they're saying we can produce all of our vehicles from one very small factory, so we can build these small factories all across the globe and be able to produce the vehicles that are in demand in that specific region at that factory. We don't have to create one major factory and ship that vehicle all across the world, because we can just produce them in the most localized factory to that specific region and meet demand that way. So this is going to be the new point of difference that is really planning to set them apart, and that's the one point of this company that investors are very confident in. So now we're going to do a comparison of this traditional factory that we see all around the world today from all the big name car brands compared to the Arrival micro factory. So now we're going to take a look from the presentation that compares the difference between a Volkswagen factory right now in Poland that sets out 100,000 vans per year compared to 10 Arrival mini factories. So they're saying that 10 Arrival mini factories can produce 100,000 vans and match the production of one massive Volkswagen factory. And the factory sizes needed for all 10 in total to produce these 100,000 vans is only going to be 200,000 square meters compared to this Volkswagen facility, which is around 2.2 million square meters. So much, much less land space and less factory space needed to produce the same amount of vehicles. They're also showing the capital expenses of 440 million for the 10 factories compared to close to 950 million to produce this massive traditional vehicle factory. And the time to open a new factory for a mini factory is expected to take only 6 months compared to 36 months or 3 years for the traditional large-scale factory. So this is the one point of difference that really has investors confident in Arrival. If they can achieve this at scale and they are able to build these mini factories across the world in specific regions that need these factories on very small land sizes for cheaper costs than traditional large-scale factories, that can really set them apart. They'll be able to produce vehicles to meet demand in every single location. They will have less shipping costs because they won't have to transport large buses from one centralized factory all across the world, because they will just be able to produce and build a small factory in only 6 months. The cost of capital expenditure to produce one factory is estimated to be around 44 million, and that can be done in 6-month time frame, and then they can start producing each one of their vehicles in that new localized factory to meet market demand. So now we've taken a look at the 4 different vehicle types for Arrival, and we've taken a look at the point of difference through their micro factories. Now we're going to examine the financial projections they have for this company. So of course, they're very early on, and the management from this company is extremely optimistic. So they believe that their high volume and revenue growth is supported from the $1.2 billion in orders that they currently have on the table. But like we've already discussed, these orders are from UPS and have the potential to be cut at any point. And like I want to point out here in the very bottom, in this very small point, in this very small print that they try to hide from you, I blew it up here, this is where it states right here, number 1 includes option to order additional 10,000 units, primarily includes orders from UPS that can be canceled or modified. So right away, that order was for 10,000 units, but Arrival estimates and they're projecting that the additional 10,000 units will be ordered. So they're overall projecting a total of 20,000 units, that around 1.2 billion worth of orders from UPS, and they're projecting it's going to come through, even though that they have the risk of being canceled or withdrawn at any point. So the revenue expectations in 2022 projection is around $1 billion. Then the following year in 2023 is at over $5 billion. And then in 2024, they're projecting revenue at $14 billion. So they really have some strong projections for this brand for a company that really isn't producing anything with very little revenue generating activities right now. They have some strong projections all based on an order that I want to stress can be canceled or withdrawn at any point. This order is not set in stone. I know I've mentioned that a few times in this video, but that's why I want to point out the risks relating to this type of company. So they hide it in the very bottom of the fine print that this order can be canceled or modified. They don't make it a very clear point because that would kind of scare potential investors away. So overall, they think they're going to have around 49% of their projected revenue from the vans, 17% from the large vans, buses at 22%, and the small vehicles at around 12% of their total revenue, which you can see here they are projecting to grow at a massive, massive rate each and every year. So Arrival is an interesting company, I have to say. They're getting a ton of hype. We've seen massive volatility in the share price. From the $10 price point before the hype, you can see they surged 155%, up over 167% at a most recent high. Then from there, shares declined, losing 27% of their value. But over the past few trading days, you can see an absolutely skyrocket back up over 38%. And in total, since the most recent news of this merger, shares are up 168%. So in my personal opinion, I think this company is extremely risky. I think it's pure speculation. I don't think they have anything to actually prove that they will succeed and get these vehicles on the market. Of course, I am a fan of what they're expecting to do with these micro factories if it can actually happen. If this company can actually develop these micro factories at scale, they can actually start building them throughout North America and Europe, then I may see a little bit of potential for them to actually dominate. But right now, it's way too early for me. They haven't even gone through the official merger just yet. That happens in the first quarter of 2021. And one thing that scares me away is the competitors. I know it's tough to say because there's going to be competitors in every growing industry, especially like electric vehicles, but there are a ton of major competitors that are also have strong market share in the traditional vehicle space. For example, Mercedes-Benz, who already has a large contract with UPS, is now developing electric vans. And a company like Mercedes, who has strong connections with almost every major company in the world, who's already being known as one of the major van and bus producers on the market today, once they come out with their new EV van and it's functional, I think their traditional customers are going to choose them over some random startup that isn't proven, doesn't have the funds to remain operational over a longer term span, and doesn't have the history and relationships with these existing companies. So I think the name Mercedes-Benz and the fact that they have a new EV van hitting the market very soon is a very, very strong competitor that Arrival may not be able to match. And another news headline is that Amazon, the company that delivers probably the most packages in the world that will continue to grow massively over the next few years, they already have an order for 100,000 electric delivery vans from their startup, Rivian. So we have another EV brand, Rivian, another company operating electric vehicles, plans to produce down the road, similar to Arrival, but they've received an order for 100,000 delivery vans from Amazon. So I think it's different. I think there's still a ton of competitors on their market, and I think that Arrival is going to have to do a lot to actually compete in this space. I think it's too early for me. In my personal opinion, I think this is a company that I would stay away from. I think EV companies have run up too fast, too hard. I think they're supporting valuations that aren't sustainable and have nowhere near the actual fundamentals of the business. Of course, there are going to be some winners, and Arrival may be that one. I could be completely wrong with this idea, but of course, it's just my personal opinion. You can take a look at the financial presentation for yourself, go over the investor report, take a look at the company's website, and determine for yourself if you like them. But for me personally, this is not for me. Way too early. I don't like that their future projections are all really based on an order that can come away at any point. UPS already has a strong relationship with Mercedes-Benz, and I think that relationship may outweigh this potential partnership with Arrival down the road once Mercedes EV vans start hitting the market. So that was my personal opinion. I kind of just shared my thoughts on Arrival, a young EV company that Jim Cramer says has the potential to be the son of Tesla. I don't think it does unless the microfactories can be produced at scale. Like I mentioned, it's the 1 point of difference that really may help the company get set up and actually compete with the other big name brands. If they can do that, I think that will help set them apart. But until that point, still high risk for me, very speculative company that I personally will be staying away from, and I will not buy into this ticker, CIIC. So thank you for watching. That was my thoughts on this British EV brand. See you in tomorrow's video.